Our next guest is a man who Fortune magazine described as the best economist since Keynes. He's also the only forecaster to have predicted the collapse of the Asian tigers back in 1997. Now, as well as his day job at Princeton, Paul Krugman is a best-selling author and a controversial New York Times columnist. In recent years, he has been highly critical of American economic policy, and he's a notorious new economy skeptic.
Clearly, a lot of good things happened in the last 5 years, especially in the States. But it didn't change the rules. We're having a good old-fashioned recession right now. It didn't really make that much of an improvement in the standard of living of ordinary people. If you look back at what technological optimists 30 years ago thought we were going to have by now, you know, flying cars, colonies in space, none of that has materialized. So we had five good years, just long enough to make it hard for the skeptics to hang on to their skepticism, but not long enough to really make a big difference. And all of a sudden, you know, things are looking pretty grim again.
In some of your writing, you use the Space Odyssey, the Stanley Kubrick movie in 1968, as a good place to start.
Now, that's 2001. It's supposed to be where we are now, right? Hilton hotels in orbit, video phones. You know, it doesn't actually look like that. Synthetic food. I mean, some of it tastes like that, but it isn't actually. You know, we're really, compared to where people 67, 68, about the time of the movie, thought we were going to be, thought was a reasonable forecast where we're going to be. We're way short, and that's always useful to bear in mind.
So was it just all hype?
No, it wasn't all hype. I mean, it's the old line. You know, this wasn't unadulterated nonsense. It was adulterated nonsense. It was it was a very good time. Productivity went faster than we thought it would. Unemployment in the U.S. fell to levels we didn't think were possible without inflation, and yet we didn't have inflation. So all that's good stuff. When you look at the roots of it, you often find that a lot of it is much more mundane than you thought. You know, the internet makes no visible contribution if you actually start going through the numbers. Walmart. Modern retailing makes a big contribution. So it's really it's the more mundane things. We had U.S. business did a pretty good job between 95 and 2000. Left us about 5% richer than we would have expected to be in 1995. That's not a revolution.
You mentioned just there the concept of a good old-fashioned recession, which America may well experience. You've also described the best way to explain recessions as a co-op for babysitting.
Sure. I mean, it's a true story, or at least they say it was a true story, of this co-op that used little coupons as the way of keeping track. Every time you had someone else babysit your kids for an hour, you received a coupon from them, and then you used it to buy the next one. And the famous story is that this co-op screwed up. There weren't enough coupons in circulation, and everyone was trying to accumulate coupons, which meant that everybody wanted to babysit and nobody wanted to use other people's babysitting services, and the result was a sort of implosion of the economy of the co-op, which was a recession. That's essentially what's happening now. Everyone wants cash. You know, all of a sudden you say, I'm not sure about those .coms, I'm not sure about those fiber optic investments. I want some liquidity, I want some cash in hand. Everyone's pulling back, and the problem is my pulling back means your loss of sales, and vice versa. And so the end result is this contraction. It's a classic recessionary scenario.
Americans seem to have put their faith, particularly over the last 5 years, into a sort of a cult of Alan Greenspan. What do you think he can do about this recession?
Well, ordinarily he's got an enormous amount of power. Greenspan has, you know, and he and his predecessors have pulled us out of the last 5 serious recessions with very little difficulty. And a few years ago he did this wonderful thing where the world seemed to be ending, and he walked up the steps of the Treasury building looking confident, and everything turned around. The trouble is, this time it's more of a really old-fashioned recession where businesses invested too much. All the previous ones have been the Fed clamped down because of inflation, and then when it let go, the economy started up again. This time, businesses really just put in too many servers and routers and all of that, and it's much harder to turn that around. And we're starting to see, you know, intimations that maybe Greenspan can't pull it off this time.
Now, a country that you've spent a lot of time writing and studying is Japan, which seemed to show quite similar sort of characteristics, let's say 10 years ago. Could the American economy go the way the Japanese economy went to the 90s?
I think we're in for a spell of a year or two when we will look like Japan. Interest rates very low, but that's somehow not turning things around. the run up to our crisis looked an awful lot like the Japanese. In both cases, the stock market had roughly tripled over a 5-year period. Now, I think, cross your fingers, I think that the U.S. long-term problem is not nearly so serious. We don't have Japanese demography. We allow immigrants. That makes a big difference. We didn't have a real estate speculative bubble the way the Japanese did. So I think our situation looks better, but it's not so much better that you would feel, really relaxed about the U.S.
Can I pick up on two issues that you've just touched on? The Japanese property bubble and their lack of immigration. In Ireland at the moment, we're suffering from the after effects of a property bubble, and we are stopping or reducing our immigration.
Economically, Ireland doesn't look like a country. Okay, now it doesn't look like a country the way the U.S. looks like a country. It looks like a U.S. region. It's quite open to movement of people in and out, among other things, because there were before the boom so many Irish abroad. So it looks now what Ireland looks like my former home in Massachusetts during the late 1980s when everything went. We had a tremendous boom built around high-tech industries, real estate bubble, and then everything crashed. And I think the long term. Well, Ireland is part of a European economy and all of that, and I don't think Ireland can't all by itself turn itself into Japan, put it that way. But it looks a little bit like a regional boom bust cycle, a la Massachusetts or California in the U.S., and that's not going to be fun.
If we keep with this idea of Ireland, the Irish government can't set its own interest rates, its own exchange rates, and we've also signed this Stability Pact, which says that even if the economy turns into a recession and goes into a recession, we can't borrow any money.
Well, the thing to say about that is the good news is that in that respect, you're really no worse off than a U.S. state, which also can't set its own interest rate, can't set its own exchange rate, and also turn out they all have balanced budget amendments which say that they don't have any fiscal policy. So you look like California or Massachusetts. Unfortunately, unlike California or Massachusetts, you don't have Social Security paid for out of Brussels, the way we do, or the defense budget coming from a central government agency. So this is it's in some ways it's worse. It's not catastrophic, I think, but it's the other good news is, by the way, we had this collapse in Massachusetts in the late 80s, a collapse in California in the early 90s. Both of them came back eventually, so these things don't last forever.
You've been worried about the dollar for some years, and you've written that it's been overvalued. If the dollar falls rapidly, and therefore the euro rises rapidly, what will be the implications for Ireland?
This is not a happy scenario. I mean, I expect sometime in the not too distant future to see a euro above $1 again. Actually, I've been expecting it for about a year and a half, but one of these days it's going to happen. And Ireland is unfortunately sort of leading with its chin when that happens. It's not a good scene. This euro business has always been a bit of a problem. Us ugly North Americans have always thought that Europe rushed into this common currency without having the preconditions. It's going to be difficult.
Professor Paul Krugman, thank you very much.
Thank you.